The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Hey, I'm going to cut the normal opening here. Just a tad under the weather at the moment. So most of you know the routine out there, which is first, it's a call and talk show. So feel free to give me a call. I'm not that under the weather to not take a call at 877-927-6648. Of course, you can always send me an email, steve@tfnn.com. Just in the subject heading, if you'd put radio show question, that way I can sift through all the garbage to get to your email, which is not garbage out there. And, of course, in the Tiger's Den, any type of instant message would work. So let's go ahead and get this show started on March the 4th. It's a magical Monday. And, of course, this is Tiger Financial News Network. Right now, the Dow trading off 400 points, 404 points, 25,622 is the print. So welcome to March Madness out here. The S&P is off 35. That's a little over 1% to the downside. NASDAQ 100 off just below 1%, so 67 points. Russell 2000 is the big leader percentage-wise to the downside. That's off 1.5%. So the question is this just a one-hit wonder like, I don't know, like My Sharona? Who's the band behind My Sharona? Anybody know? Plenty of one-hit wonders out there. I'm not sure why I went with My Sharona, but so let's go try to figure out if this is not the Cars, but let's see if we can get the knack of our TAS market profiles out there. Ooh, that was very smooth, very subtle out there. So, and what I mean by that is there are certain signals that are going to generate the likelihood of a change in trend. For example, let's take a look at the gold contract. So we're looking at the April gold contract, and when you break through support, in this case here, we're just using support as our TAS market profiles. And as price is moving higher, as gold has done since the lows, I'm just going to really take a look at November. Well, no, let me do this actually. No, let me do this. You're wondering what the heck you're going to do, Steve-O. Just as price is moving higher, as long as the bottom of those boxes get tested and they hold, there was nothing more than a pullback to support. And we've seen that for gold. Basically, it has not broken through support since November 27th, 2018. So on Friday, that was a clear break of support. Bullish structured box, so you knew that. And nothing more bearish than a failed bullish pattern. Now, we can also see other instances on this chart here where price is broken through the bottom of a box. So, for example, if we start taking a look at the days back here in early November, the 9th, the 10th, or the 9th, the 12th, the 13th out here, what you're looking for is, well, where is it? Since the profiles didn't hold the support, where's the next level of support? Ideally, what you look for is a prior swing point. So in the case of gold right now, what you're dealing with is the swing point area between January 22nd, 23rd, 24th, in essence out here. And gold is pulled back into that level. And we can see that there was a wide-ranging bar out here on January 25th. We don't have volume turned on as we speak right now. We really don't need volume to be turned on at this stage of the game. You can certainly use these wide-ranging bars to the upside or downside as a significant area of a breakout. Back here in November, as price was pulling back, it pulled back to the breakout, that wide-ranging bar from October 11th out here. So I think what you and I can clearly say, well, what we will clearly say is if we see gold trade underneath 1281.50 out here, what you can expect is the next pullback area gets you swing point wise into December into the price range of 1242. So I'm not making the prognostication just yet that that's what's going to happen. I wouldn't do that until we see this 1281.50 level fail. Now, the whole reason to go through to get the knack of this, the My Sharona knack, is so that we can switch over to take a look at what's going on in the general markets. What's it mean for the Russell 2000 to be off by 24 points? And so what we're going to do here is we're just going to switch over to this page, which is the current March contracts for the equity futures contracts. If you were to ask me to just simply interpret what is the meaning behind the ES and NQ right now, what you and I would say is product is pulled back to a level of support. So those are going to be the two panel screens. Well, let's take a look at the ES as an example and let it populate here. What you can see is now today is a key reversal session. That means the bar today has exceeded the high and low of the prior day. All of the equity futures contracts have done that. But where is price pulled back to? So it's gotten back inside the box, meaning below the top at 27.98, bearish structured box. But what we also know is that both buyers and sellers for the ES Mini believe there's fair value at the price point of 27.68. We're trading at 27.69. It's actually 27.68.75. So you got to like that. So price is what? In the ES Mini? Yes, we've seen a breakdown. We haven't seen a breakdown of support. Certainly, prices pulled back to that first level of support. Now, if there were to be a close today below 27.68.75, not by a couple of ticks, but a decent close below that, that opens up the door for your Sharona to get down to about the 27.10. Maybe it won't be a one-hit wonder out there. I don't know if the Knack had another good tune or not out there. I remember that being a pretty cool tune, or a pretty popular tune, I should say. If we look at the NQ, really the same type of thing. Now, in the case of the NQ, the question is 70.69, which is the high from the trading session of February 13th. That was old resistance established by a bearish reversal candle, the shooting star. And so priced inside of the NQ is pulled back to its point of control, which is at 70.70. Our low so far today has been 70.74. We're trading at 70.90 right now. So 70.69.75 to 70.70 is really a support level because both buyers and sellers are hanging out there. The key level inside the NQ is going to be the bottom of its box, in my opinion. That's 70.21. It's only a 50-point move down below the center out there. So, you know, it can do that, as you know, as what you've seen so far today, can do that in a breath and a heartbeat out there. So that's what I see when I take a look at the NQ out here, is that prices pulled back to a level of support thus far for the day. The Dow, different story, because the Dow, if this were to be the close, and you can see that it's priced at 25,630, give or take, in the center, it's 25,751. To me, that's a sufficient enough close below that point of control that says price should head to 25,201. But we've saved the best for last out here. I think we've saved the best for last. And the best for last is probably our signal comes from the Russell 2000. And inside the Russell 2000, that's the screen you're looking at right now. Here's what we know. Price, in essence, has tested support. Not exactly. The low today, 1563. The bottom of that box, 1561. So close enough for us. If there were a close below 1561 today, what this would be telling us is the Russell 2000 has a change in trend signal, very much like what you and I just looked at inside of gold. Of course, that next price to the downside would be its lower swing points in the February 7th type area, around 1492. So as we speak right now, things look, and I can give you lots of reasons to be bearish out here, but right now, prices just pulled back to test support today, so far. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So the Dow's off 360. So the first question, the only question so far that's come in is from Earl, and we may have answered a portion of the question, but I don't really think so. Earl's question goes like this. He says, do you have a price for the NQ where you would buy the dip out there? And as we went off the air, we said, okay, everything has come back to a level of support. In taking a look at this chart and just studying the market profiles, and certainly in taking a look at the Russell 2000. So I think the Russell 2000, since it's gotten down to the bottom of that profile, Earl, we really have to watch for, is there a bottoming pattern there? In the Russell, in the first place we would likely see something like that would be on a short-term chart. That would be the 30-minute time frame. And what we'll notice is we made a lower low during this session here from 1 to 130. And that's going to, or may get us to bar number 8. Looks like it'll get us to bar number 8 of the 30-minute Tom DeMark setup 9 count. We know that a market can, an instrument can, in this case here, bottom on bars 8, 9, or 10, the bar after bar 9. But this bar doesn't finish until 130, so we might have to look back at it. But from an intraday standpoint, and I don't know your question whether you're by the dip thought process is an intraday type thing or a longer term thing. Let's say that it's a longer term element out there. It's a longer term element. I think there's some things to really consider. So in the NQ on a daily basis, as we mentioned, what we have out here is key reversal sessions in all of the indices out here. And if we take a look at the NQ, well, one thing we're going to notice, if we go ahead and we use the low from January 29th, and we have to use that low for doing our Chapman wave count. Look, if I start at the low out here from December 26th, you'll see that wave number 7, which is the one we want to pay attention to, took place on February 13th. Actually, it stayed around until, and it got voided on February 15th out there. So that said, we had to start that count over. I like to start that count over after that 4th wave out there. And so those are the blue letters on my screen, which takes us to wave number G. Now, there's plenty of A to B equals CD patterns out here. We can see those here if we go ahead and we put those into the system where the market is at, or the NQ specifically, close to the 1 to 2 A to B equals CD. So those can, at an A to B equals CD, that sets up the sell the D point. Well, we're getting that signal here, or it appears we're getting that signal, right? The day's not over. I don't know what the candle, well, as long as there's one tick in the red, it's going to be a key reversal. Will it be the bearish engulfing candle as well? So I guess what I wanted to say is that we're in wave number 7, or potentially in wave number 7. It appears to be wave number 7. Earl, we're getting bullish or bearish reversal signals. We haven't seen support get cracked. But if we were to see a close below 70.21, and that was not necessarily have to be today, and as long as this profile is active, I would be thinking of selling the rallies versus buying the dip at this stage out here. But right now, the buy the dip mentality is the appropriate call until we see price begin to fail. But you know, let's look at if you look at the ES Mini as an example out here, you've got wave number 7 from the bottom. You've got Rhodes momentum indicator top. That's taken place today. That's being confirmed. Wave number 7 out here. Maybe I already mentioned that. Everything happening below the resistance of this November time frame out here. That's where we saw the last reversal up at these levels. And but support hasn't broken, but you are trading below Stevie's green line out here. That's priced, by the way, 28.01. So this is giving us an indication that says, okay, time to pause. Is this just a one-hit wonder, a one-day wonder? I don't know, because we don't have key levels of support having failed just yet. The Dow, we talked about how the Dow was a little bit worse with regard to market profiles than the other instruments out here. Now, the Dow's profile on that system is slightly different, so let me just turn this off here. I don't want to confuse anyone. And they oftentimes, they can be different between different charting packages out here. But what's more important to me is the mere fact that we've got that Rhodes momentum indicator top. And if this is a top of consequence out here, the normal pullback in this case would take you back from a Dow equity futures contract to the lows of January 17th. And that's in a price range of around the 24,000 level, about another 1,600 points south of us. So we're getting these reversal signals. They're across the board. We have it in the Russell 2000 as well. Inside the Russell 2000, you've got trend line resistance. You've got the Tom DeMark setup 9 count. You've got the Rhodes momentum indicator pattern that is in effect today. What I think that it's best to do, it's just with these topping signals out here, Earl, I've got to say the buy, you know, it's not like we're in between, you know, we're count number day 4 of a 9 count, or, you know, we don't have Rhodes momentum indicator top, or a number of different things out there. I think it behooves you to be cautious out here. Now, it's not to say that we don't get some type of a bounce, and that is, look, I don't know where the end of the day reading is going to be on the spot volatility index, but right now it's at 17.98%. The blue arrows on this chart out here show you all the other days where there's one-day rate of change greater than 10%. Typically, not always, but typically what transpires in within the following 48 hours, but over the last several years, it's really been 24 hours, is you get some type of stall or bounce or bottom out there. And so, you know, that says, okay, I could see the buy the dip in the futures. You were asking about the NQ specifically. I just think you got to be just a tad cautious out here. You know, at least wait for another hour, I would think. In the NQ specifically, you know, we don't have that same pattern as the Russell, meaning the Russell gave us bar number 8, or looks like bar number 8 of that setup count out there. I want to use the week indice. Maybe that's the wrong thing to do, but look for signals from the weekend to see out here. So, but I get the trade. I get the thinking. Just think if it's the buy the dip to hold on to from the long term. There's too many other topping signals out there that says maybe that's the right move, but you'd have to really be cautious about that. So I hope that helps you out. Ruby wants to know about the 30-year bonds. And we take a look at a 30-year note specifically out here, Ruby, what we're going to see is it's possibly at support. Pretty good chance that what we're looking at with regard to Treasury bonds is see how price here came back to the prior swing point. That's taking us back to January 18th. Let's go ahead and just take a look at bonds in dollars out here and see how price just came right back to that level. So it looks like we are in some type of consolidation between 144 and 147. Now, the 147, if we do get a bounce from here, if this is a bottom, what you're going to look at is to see if we just simply run out of gas at that descending trend line. So if you're long TLT as an example, or you're long bonds, that's really what you would be watching out here. Now, if price breaks 144.09, closes below 144.09, Ruby, you're looking at a move to 142, 143 really, from a price standpoint. But right now, support is held. And if we look at Treasury bonds and the other currencies, it looks like they're buyers today in effect versus sellers. So pretty good chance T-bonds have found a short-term bottom. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Dow's at off 328. Let's go to our next question here. This comes in from Brent Martinez, California. Hey, Steve, great start to show day. A lot of important info imparted. Thanks for that. Anything that the VIX might tell us today? So Brent might have been writing that question before we were taking a look at the spot VIX index out there. So the only other thing, Brent, that I guess I can add here, it kind of feeds into Earl's question about, is this a buy the dip mentality? Is this a one-day wonder kind of a thing? And that's in taking a look at the New York Stock Exchange chart that I have out here, where at the bottom of the panel, it's just so easy to see that spot volatility index and it's a 50-day exponential moving average, which is 1744. So as long as price is underneath the 50-day exponential moving average, it could just be retracements back to support. We sort of covered that already out here. Whereas I close above the 50-day, it's a whole different thing. So as far as a spot volatility index, that's really all that I can see. Now, remember, we use this spot volatility index in a number of different ways to help us read the markets, and certainly one of those is to impart knowledge on us with regard to what's the liquidity like. And when it's ever below the 50-day, Stevie's checkbox says plenty of liquidity in the market. We've talked about using the corporate bond ETFs out here, such as like HYG. Now, the interesting thing today inside of HYG is that it formed its high with a TD setup 9 count. It was the bar after bar 9 on the 27th. That so far is its high. Now, the HYG should pull back to test the lows from February 15th. Those lows, by the way, are 84.86. We're at 85.42 right now. That would be another thing to watch. If price pulls back there, tests and rejects it, Earl and everything else seems to be copacetic, in the equity futures contracts, and that would be like a buy the dip-ish type area out here, assuming price continues moving lower, at least the HYG. Now, look, what I have found is that I look to the HYG as for information versus truly using it for a trading strategy to correlate with what you're going to do, let's say in the ES mini or the N, whatever, So, but it is really helpful to understand what's going on here to see if it is confirming anything else that you're taking a look at on the other charts, time frames, and so forth. So right now, as we speak at 1:33 in the afternoon, everything is moving in the right direction, just with the exception that support has not been broken to tell us whether there's a change in trend. Now, why is that important, the change in trend? Why is it that you don't necessarily have to be eager to jump on the short train right now? And I'm not saying don't. I'm just saying, why is it that we don't have to pull the trigger here when you don't have all the information that you might need? And one of those reasons would be if this is a top of significance, like we took a look at really in the equity futures contract. Well, if we go look at the cash indices, we can see the same kinds of things out there. What was I going to? Where was I going with this? You really ought to have a strategy here, Steve-O. Well, where I was going with this is if we take a look at this chart here of the Dow, what we know is that Dow both in, well, at this stage here, we can really say the Dow in euros and dollars. Here's the consolidation pattern really in the Dow inside of euros. It's the green line at the top, the yellow line at the bottom. Here inside of the Dow, inside of US dollars, it's really the two yellow lines, 23,350, we'll call it, to 26,616, give or take. So when you're in this consolidation, you get all the way back up there. If it's a top of significance, price can easily pull back to the bottom of the consolidation. That would be normal. It'd be normal just simply because of the annual seasonal cyclical phase where price closes below the low of the prior year out here. And that's 23.3 and we're at 25.6. That's a pretty decent move to the downside. I'm not saying we're going there just yet, but if we do see these levels of support break, meaning it closed below them, it increases the odds that that's exactly what's going on. So, Brent, I hope that helps you out. and at least with regard to Stevie's thinking out here. So what else we have? No other questions that I see inside of by email, or certainly inside. Oh, I take that back. There's one question from Ruby inside the den. She wanted to also look at the ZN. That is the 10-year note out here. And the best that I can tell, so this is trading differently, Ruby, than the 30-year Treasury. But as we take a look at it, it's got support at 121.05. So it's trading down into that level. Just really been a sideways-ish type of a move as we speak right there. So that's what I see. Not anything of a lot of interest. If you're an intraday trader, then you want to know what's going on in the daily, but you'd be looking at some of those short-term charts. So that's what I see there. So I hope that that answers your question. Gold. We took a look at gold, right? So it's interesting, the mining equities out here. Like the GDX is up by 4 pennies today, with gold being back 11 bucks. I just want to make sure. So gold could easily have found support. Easily, really. So here's what we're looking at. Remember, on the daily time frame chart, that's what we looked at first. I was only looking at daily profiles. And as we take a look at this chart, here I have daily, weekly, and I have monthly profiles. Now, this is Stevie's composite or synthetic contract, so it's not the April contract, which really what it allows me to do is stitch together all the prior contracts so that I've got continuity and data, can look at all kinds of things out here. And it provides me with a unique set of profiles out here. Sometimes the profiles match, sometimes they don't. But I found this to be a great tool for leading indicators. And, well, let me put it like this. I couldn't garner up monthly profiles if I were using the April contract. There's not enough historical data to go back. So I have to use something like this, which allows me to put on the monthly time frame. So we take a look at where the price of gold is trading right now, which is 1288.40. And we look to the bottom of the weekly profile, 1288.30. And we look to the top of the monthly profile, 1287.80, prices pulled back into a level of support. Now, all of that is lining up with the swing point analysis that we looked at, only it's providing us with a little bit more information. So gold could find a bottom right here, right now. Now, if it's going to do that, I believe it's the 5-hour chart that will also confirm this. We can see the A to B equals CD to the downside. We see Stevie's red line, 1298.60. To a certain extent, even if we got a bullish reversal candle right now to confirm this A to B equals CD, we really want to see a close above Stevie's red line, 1298.60. Now, that number will change over the course of the next several hours, but you can use it as a pretty good guideline out there. So if we're going to see a bottom, more than just a counter trend rally, that's what we need to see. A close above Stevie's red line on the 5-hour time frame. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So no questions yet. So the email lines are open, steve@tfnn.com. Of course, the pings inside the Tiger's Den, those are open as well. And the phone calls, 877-927-6648. So a little chatter in the den. John has thrown up a couple of charts, one for gold, one for silver, I believe. I couldn't pull them up. But in the case of silver, let's just talk about silver out here. Here we're taking a look at the silver futures contract. Now I have changed this over to my compositor synthetic file, symbol, I should say, really. And this here we can see that the very right-hand chart shows us silver in daily. And price is below support, 1571. And on the 5-hour time frame, below support there, 1541. On the 2-hour chart, below 1538, that's support. 60-minute chart, below support, 1520. If we go to the 30-minute chart, let's change 60 to 30, trading within support, potential support. It's a bullish structured profile. The bottom of 1508, the top is 1517 out there. So you need to see it close above 1517 to say that, okay, maybe this thing has bottomed here. Whereas a close below 1508, as long as that profile remains out there, well, nothing more bearish than a failed bullish structured box. That's what you would be dealing with here. So that's what we see. Now, on the longer term basis, I'm just going to switch over here, maybe. This is where? No, not there. Here? Yeah, here. So here's the daily. Let's just cut to the chase. Let's go take a look at the weekly time frame because we didn't have that on the other chart. And so on weekly basis, what we can see is we're trading right into potential support, and that's the top of the box. 1513, we're at 1512 right now. So if price closes underneath that 1512 level, 1513 level, I apologize, 1513, you know, price could easily run back to 1476 out here, 1458. On a monthly basis, price is already inside of the box. So that next low or bottom is 1445, 1481. So what's all that mean? What that means, at least what it means to Stevie, is we don't see a bottom here just yet. If you're going to see it, you're going to see it on the shorter term time frame. The shorter term time frame, you know, here would be on, let's just call it the 30-minute time frame out here. And it really needs to close above 15.17 for Stevie to entertain that idea that says, oh, maybe the coast is clear out there. So watch those longer term profiles. You know, what we're seeing with regard to gold, or maybe you don't know it, but clearly prices have been moving lower in terms of euros, yen, and pounds out here. So we're not necessarily seeing any natural buyers. And I don't see where price is at a swing point area other than in yen, right? In pounds, it's below a prior swing point. In euros, it's got further to go to get down to swing points in the 11, 20-ish area out there in terms of euros. So that's what I see. And so when you take a look at the GDX as an example, which has held up pretty well today, right? So up a penny or two. What is it doing out here? It's below the daily profile. Can the GDX trade in opposite direction of gold? It can for a long period of time. No, not for a long period of time, but certainly on a daily basis. Is this a bottom in the GDX? Not until we are certain that it's a bottom inside of gold. Would I go ahead and I would make that statement out here. So relatively unchanged, looks pretty good out there, but we see support in gold. We don't really have a bottom signal in any of the time frames, at least that Stevie is looking at out there. So hopefully that helps you out. That's with regard to having no questions in the on deck circle out here. So let's take a look at some other things that are missing. Some other things too. Nothing's missing. Maybe other things that are moving. Amazon would be good to go take a look at. Let's look at Amazon, which is up 1.5% today. So AMZN, what is it doing? So it's traded this morning into the top of its profile at 1708. That's a weekly resistance level out here. And the daily is at 1716. So there's your range with regard to where resistance is at. And so what Amazon would have to do in order to take it to the next level would be to close above 1716.20 out here. So hasn't really broken out, so to speak. Doesn't look too bad. Volume is not too bad. 4.5 million shares. It's going in at 10.9. Not horrible, but we're already 4 hours into trading, so it doesn't have volume, so to speak. Not going to break out today, or shouldn't break out today, but a test of resistance thus far. Also trading to the upside. Mercado Libre, let's see, Chipotle out here. Both. Well, take a look at Chipotle. Let's come over here and take a look at CMG. Today it's trading above the top of its profile. That was a bearish structured profile out here. That's at 612.60. Here at 619. So that looks pretty good. Let's take a look at the longer term chart out here. So the longer term chart for Chipotle has an A to B equals CD pattern. So if we're looking for a price projection out here, we start with the monthly low in February of 2018. That would become our A point, our B point out here, August of 2018, and our C point in December 2018. And so the one-to-one looks like this is headed to that, it's headed to Lucifer. It's headed to that very devilish price point, 666.37 out there. Nonetheless, that is its target. On a monthly basis, the volume, was it taken out with volume? It wasn't. Doesn't matter. It looks to me like that's where Chipotle is headed to. CMG is the ticker symbol. That's based on the A to B equals CD pattern on the monthly time frame chart. So we got kind of a 2-minute countdown here. What can I cover for you that would be of substance to you in a minute? And I don't know what that is. Apple. Just curious, what is Apple doing out here? AAPL is the ticker symbol. And so Apple's got a brand new profile today, and it's trading above that. The profile is 175.23. So that's interesting. Now, what Apple really needs to do, though, whether it's this week, is close above 176.71. That's the top of that weekly profile. So that's a bearish structured box. So if you go back to Earl's question in the NQ, watch Apple. Because if Apple closes above 176.71, 176.71, I would think that would be excuse me, bode well for the NQs out there. So that's the news on Apple. If you can kind of tell, I'm just I won't tell you. You don't want to know. In any event, Facebook is up $3. What's going on with Facebook? Are these guys ready to rear their head to the upside? Looks like Facebook, if it can clear 166, here's the sixes again, 166.66, clear that level, 172.47 would be on the way. All right, folks, Dow's off 307, S&P off 22. We'll be back for the 2-minute wrap in just a few minutes.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Nico DeHaan and Paige Clark have launched a special for a limited time only. Save 25% off Primal Edge and Health Signals. Just use promo code HEALTH for Health Signals or use promo code PRIMAL for Primal Edge and save 25% off instantly when you sign up. All the details are available on each order page at TFNN. Certified personal trainer Nico DeHaan's newsletter Health Signals comes out twice a month and is packed with great information on health, fitness, and diet. Primal Edge is specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox, and contains a special blend of ionic soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form. This sale won't last long. Sign up now using promo code HEALTH for Health Signals or PRIMAL for Primal Edge and save 25%. For all the details, visit the front page of TFNN.com right now.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.